perhaps one of the people best placed to advise us on how the markets might move, not just today, but in the near, the medium and the long term, is our market master for the morning. We have invited him earlier because it's such an important day. Krishna Kumar Karwa, Managing Director of Emkay Global Financial Services, joins us on our Market Masters segment. Good morning, Mr. Karwa. Thank you very much for joining us.
Good morning.
Well, are the events of the weekend, the gas price as well as the mandate for the ruling party, strong enough to get the index in 2014 to new highs?
I would think so. I think the way the mandate as far as the state elections is concerned, and more than that, I think the speed with which you had this diesel deregulation coming along and the gas price hike. And now for the next 1 year at least, you do not have any great political requirements. So I think the roadmap is clear in terms of introducing more reforms, and if diesel deregulation is a very big reform. So I would imagine that from a local perspective, the news flows would continue to become much more positive. There was this feeling which was coming in the system that things are not moving as per expectations. But now I think the opportunity to introduce more reforms, be it on the GST front or on the insurance bills, etc. So those kinds of positive news flows should be there. So from a local perspective, I think the opportunity seems to be there. Whatever challenges we may have would be on the global perspective, where for the last 1 month we have seen a lot of volatility.
Okay. Mr. Karwa, good morning and thank you for joining us. You've started off on an optimistic note, so I'm going to ask you, who are the key beneficiaries of the gas price hike in your mind, and what are the what are the upsides that we could see either in the oil marketing companies bunch or with respect to stocks like ONGC?
See, apart from looking at it from a very short-term perspective in terms of individual stocks, first I would like to say that from a directional perspective, I think this is a very key important event which we should be appreciating. And also from a longer-term perspective in terms of the impact that it will have on fiscal deficits, etc. Those are the key positive takeaways we should have. As far as the individual stocks, or you can say oil marketing companies, obviously are the immediate beneficiaries from an immediate perspective and also from a longer-term perspective. As far as the gas price hike is concerned, which was also pending for long, so that also it helps a lot in terms of the whole process, where as far as the new oil fields, etc., investments were concerned. And also it helps the companies like ONGC. For Reliance, I think there are some special benefits for as far as deep or high pressure wells, etc., is concerned. So I think they should also over a longer period of time benefit from whatever announcements which have come over the weekend.
Okay, Mr. Karwa, just after the gas price got postponed a month ago, there was a lot of talk about why should India get a Modi premium since reforms have not been announced. Is a major re-rating on the cards, or there were people who told us yesterday that this doesn't merit a re-rating. It's very easy to be market friendly when the market is in your favor. The FIs will want to know whether the government will be market friendly when oil goes to 100.
Absolutely, that's the key question that over a period of time only you can answer. But if you take step by step, I think in the next 3-4 months you'll possibly see a lot of divestments maybe in ONGC, etc. So we expect that there should be, this is just the beginning of the process of more announcements coming in. So yes, you can say that when times go against you at that point of time, how does the government behave? But looking at the way the track record so far, I would assume that government would be very, very pragmatic as far as its decisions are concerned.
Could there be a case for an upward revision in India's credit rating as well because of all the reforms that were announced?
I think that's the process, and this would always help in that process as far as the re-rating, etc. is concerned. There were some positive announcements on that front, I think a few weeks ago, and if we continue to perform, then there is no reason why we should not get further re-rated.
Okay. Well, 2-3 months back, when we were, around the mid-September level, when we were coasting at 8,200, or when we crossed 8,000, emphatically, people were throwing in 9,000 by March very easily. Do those targets now come back into the ken?
And that will be a function of how global flows behave, because I think that's the most important thing. We may do the best as far as our local issues are concerned, but without robust global flows, it would be very difficult for the markets to rally by almost 15% on an index basis from the current levels. And there seems to be a lot of volatility, which we have seen the flows have also slowed down. And the very fact that if you see last week there was the results in one of the IT majors, which was not exactly for disappointment, I mean slightly below expectations, but the savage cut of almost 8-9% gives you a feeling that as far as the stock prices are concerned, they are probably priced to perfection, and the markets don't have the appetite for any disappointment on the numbers front. And so we are going through the result season. So those kind of issues could be of concern. But otherwise, if reforms, if we have more announcements coming in the winter session and the budget session, then there is no reason why we cannot see 9,000 in the next 6 months.
Okay, so when India outperformance is given is what you're saying, Mr. Karwa.
Mr. Karwa, you were pointing out that the global cues are perhaps the only thing that could derail our market. But is there a case being built for our markets to decouple from the global space, that even if there's a sell-off in global markets, we could be resilient?
Yeah, that is a distinct possibility. And if you see, the domestic flows have been robust. But having said that, there is certainly a limitation to the ability of the domestic flows to be able to manage a global sell-off. So if there is a global sell-off and India will also get its share of the outflows, if any, then there can be a pause in the overall India as far as the stock market is concerned. But having said that, the thing is that India possibly seems to be amongst the best sweet spot versus other emerging markets. So it could also be a case where what you are saying, that there could be volatility globally and there could be outflows from other emerging markets, but if we continue to perform well on the domestic front, then we may still have neutral to some positive global flows.
Okay, Mr. Karwa, from here on, since the reforms juggernaut appears to have started off in right earnest, how would your stock selection be? Would you stuff it with cyclicals?
I don't know what to call financial services, whether it's cyclicals. If you believe that they are cyclicals, then I think the best place to be in, if you believe that there will be reforms and your GDP growth, etc., will be upwards of 6% plus in the next 12 to 18 months, then the financial services space seems to be a place where you should be placing your bets on. That's one sector which we believe can give you much better returns. Apart from that, I mean, autos obviously, but auto valuations are reasonably priced in. So that could also give you a very good returns if your GDP growth is on track, and maybe the analyst estimates will get upgraded in the auto sector. So yes, I mean, obviously you need to be there. But having said that, I think a balanced portfolio always works. In the last 4-5 months, if you would have seen, after the initial rally in infrastructure, cap good stocks, etc., but finally what delivered returns were your consumers, or whether it was your FMCG, IT, pharma. So they continued to give you returns. So ultimately it all boils down to the quality of the balance sheet and the businesses. These announcements, etc., do help you a lot, but within that, then you will have to do your bottom-up picking.
Okay, let me get into greater detail. We have a query that's posted on our Money Control message board. It is with respect to earnings itself. Rajesh Sharma from New Delhi has asked us, or rather has asked you, which sector do you expect will outperform in this earnings season? So far, we've gotten some good numbers, although perhaps due to lofty expectations, stocks have come off. But in your mind, which is the sector that you would be most bullish on this earnings season?
I think it's going to be the pharma sector which should deliver, which should give you very good returns, and that's the one where you should see some outperformances to continue over there. And apart from that, if you look at the way your private sector banks have been delivering growth and the numbers, so that's certainly a sector to look out for.
All right, Mr. Karwa, we leave it at that. You have a great Diwali and wish you and your entire team a happy and prosperous Diwali from CNBC TV 18. Thanks so much for joining us.